You finally have a dashboard, revenue by month, expenses by category, maybe even a waterfall chart, and it looks really beautiful. And you feel like you are finally running your company on data. But the problem is, you're not. You're running a company on a beautifully presented piece of garbage. The AI tool didn't fix your data. The Power BI license didn't fix your data. The dashboard made the garbage look like insight, and the decisions you're making from it are only as good as what went into it. In this video, I'll show you 3 fundamental problems that make every BI tool useless and what you need to do to fix before spending another dollar on intelligence tools. Hi, my name is Kishore Dasaka. I run a fractional CFO firm for startups. We see this every time a founder gets excited about BI. And here is the reality. The tool is not the problem. Let's start here. Power BI is a good tool. Tableau is a good tool. The AI analytic platforms people are selling right now are genuinely impressive. The problem isn't the tool, the problem is what you're actually feeding it. There's a good old principle that has been true since the 1970s and hasn't changed much despite 50 years of technology improvement. And it says garbage in, garbage out. Feed a sophisticated AI tool messy, incomplete and unstructured data, it will produce sophisticated looking, beautifully formatted and completely unreliable output. The charts will render perfectly, the numbers will add up, but the inside will be wrong. We've sat with founders who built entire quarterly plans of dashboards that had a categorization error baked in from month number 1. Every report downstream was off. Every decision downstream was off. And nobody knew because the dashboard looked right. So before we talk about what tools to use, we need to talk about what makes data usable. Problem number 1 is your chart of accounts is a mess. The chart of accounts is the skeleton of your financial data. Every transaction that happens in your business gets classified into a category in this chart. If the skeleton is wrong, then everything built on top of it is wrong. And here's what I see constantly. A founder starts a company. Their accountant opens QuickBooks or Tally and uses the default chart of accounts, generic, designed for nobody in particular. Expenses getting lumped, software subscriptions going into something like office expenses, contractor payments going into professional fees, cloud infrastructure going into miscellaneous expenses and so on. Now, 18 months later, you connect this very data into Power BI and ask it to show you what your technology costs are. It can't, because your technology costs are hiding inside 3 different categories mixed with things that got nothing to do with technology. You ask it to show you your cost per product line. It can't, because nothing was ever tagged by product line. You ask it to show you the gross margin by customer segment. Again, it can't, because your revenue was never really separated into segment. It all went into one ledger called sales. The BI tool here is not failing you. Your chart of accounts is the underlying problem. A well-designed chart of accounts for a startup separates revenue by product, by segment and by geography. If those dimensions matter to your business, if those dimensions matter to your business. It separates costs by department, by function and by product line. It is built for the questions that you actually ask, not questions that a general template assumes that you will ask in the future. And it needs to be set up before you start coding transactions, not after 18 months of messy data. Problem number 2, you have no dimensions. Now this is the one that most founders have never heard of. A dimension is a tag, an attribute attached to a transaction that lets you slice and dice your transactions later. Simple example, you have a marketing expenses, let's say $100,000 spent last quarter. Now without dimensions, that is all that you know, $100,000 that went into marketing. With dimensions, you will know what campaign it was for, which product it was promoting, which geography it was tracking, and which channel it ran on. Now, your BI tool can't answer something. Now, your BI tool can answer something really useful. Which campaign drove the best return? Which product is costing the most to acquire customers for? Which geography is the most efficient? Without dimensions, your BI tool shows you only the totals. With dimension, it shows you what levers that you have to pull to make your marketing more efficient. And levers are what you actually need to make decisions. The dimensions that matter for most early stage startups are as follows. Number one, department. The dimensions that matter for most early stage startups are department, so that you can see the cost by team, product or service line, so that you can see the margin by what you sell, customer segment, so that you can see revenue and cost by who you sell it to, geography if you operate across different markets, and channel, how the customer came to you. Now, none of these are complicated to set up. All of them require a deliberate decision on your part before you start recording transactions. Most founders make that decision 2 or 3 years too late. Problem number 3, your data isn't complete. Here's the third problem, and this is the quietest one. Your data has gaps. Not obvious gaps, not missing months or blank columns, but subtle gaps. Transactions that got entered late, after the month that was already closed. Invoices that were raised but never matched to payments. Expenses that were paid from a personal account but never made to the books. Revenue that was recognized in the wrong period because the accountant wasn't sure when to book it. Each one of these is a small gap, but together they mean that your data is not a complete picture of your business. It is a partial picture. And when you feed a partial picture to a BI tool, the tool doesn't know what is missing. It analyzes whatever it has and it presents conclusions. The conclusions look complete because the BI tool presents it well, but they're built on a data set that doesn't capture everything that actually happened. This is why the close discipline from your accountant matters so much. We talked about this in one of the previous videos. Books closed on time, entries posted daily, reconciliations done before the month end. Now that is not just accounting hygiene. That is the very foundation for data completeness. No BI tool can ever fix an incomplete data set. That has to be fixed right at the source. How do you know if your data is ready for a BI tool or an AI analytics layer? 3 questions. First one, can you answer a specific question right now without building a new report? Something like, what was my gross margin on product A last quarter? What did I spend on sales in the North region in Q3? Which customer segment has the highest churn cost in a month? If the answer is, let me pull that report for you, then that means you're not ready for AI or BI yet. If the answer is, we don't track that anyway, then you're definitely not ready. The second question is, are your last 12 to 24 months of books clean and reconciled? Not approximately, not mostly, but fully cleaned, reconciled and closed properly every month. If there are reports that you're not sure about, fix those before you connect any tool. Do you have chart of accounts that was the third one is, do you have chart of accounts that was designed for your business, not inherited from a default template? If you opened your accounting software and used whatever was already there in the software, that is the place to start. Now get these 3 things right and any BI tool that you put on top of this accounting layer will actually work. Skip them and you will be paying for dashboards that show you nothing real and tangible. The intelligence layer is real. AI analytics, Power BI, real-time dashboards. Now don't get me wrong, these are tools that are genuinely powerful and really useful, but they're only as powerful as what you feed them. A well-designed chart of accounts, dimensions that let you slice your data by what actually matters, complete reconciled books with no gaps hiding in the books. You need to get all these three things right. And the intelligent layer works exactly the way the vendors promise. The foundation always comes first before the intelligence.